All right, so let's talk about this setup that I'm gonna be taking more often. Pretty much the same thing I've been taking. Basically MWs, M's and W's, M tops, W bottoms. Basically, right? It's a trend. It's a trend shifting strategy. I'm gonna call it that. It's a trend trading strategy. So it's trying to catch the very beginning of a trend. Basically calling tops and calling bottoms. It's not necessarily. People say you shouldn't try to call tops and call bottoms. Um, and as I test this, I'm gonna find out how true it is. It's been working out pretty decently. You catch pretty decent moves. It's a couple layers of confirmation. Again, all I can do is test it out and continue to try it and continue to see how it works. So we got a cherry picked example here, and I'm gonna continue to back test it and see how it works in the past. But we do have two cherry picked examples here. One sim trade that's playing out, but this one is pretty much the same. Right here where we first got this down move after consolidating. We had plenty consolidation. Same thing back here. This one's not cherry picked. I'm finding this in real time. We got our high, we got our low, we got our impulse move higher. We got that bearish move through those lows. So this is where we'll be looking to take an entry up in this area. Right? But what we'd be looking for is before we're taking a blind entry once we came back into this level. So our blind entry will be here. But what we would be looking for now is us waiting to see this area get retested and then confirm that it's selling off, and then taking a break out of whatever structure. So here's the high, here's the impulse move up, here's the leg that we want to see broken. It broke right here. Here's the retest of that leg. And before, we would just be getting in on that retest with our stop above highs, targeting 2 to 1. And then, this impulse move or sitting in this drawdown, we would just have to stomach. And a lot of times what I was seeing was we get in as soon as we retrace back into this area so we don't miss the move, and price continues going and stops us out and then goes. So I was thinking about how can I refine this so we can see less of that happening, right? So now we're just going to be taking a breakout, especially when you're looking to counter against a trend. In this case, we're kind of seeing sideways movement. We developed a range, even if we didn't know it was a range at the time because it was still developing. It's important to have those layers of confluence and at least confirmation for you to try to go against that trend. So what is the confirmation? What are the confirmations that we're using? The confirmation in this case is going to be that high that was put in, wicking the high. So we took liquidity, which is trapping buyers into the market here, right? Which is going to fuel a selling move down. The second layer of confirmation will be an impulse move through those lows, showing that sellers are in control and they're willing to move price lower. So that's the second layer of confirmation. And then our third layer of confirmation is seeing that retest rejected, right? Buyers pulled back into that level, but sellers came in and made sure that they didn't go any higher. So again, instead of taking that blind retest to that level, now we're just going to be looking to take a breakout. Why is it safe to take a breakout now? Because we had those three layers of confirmation. Seeing sellers step in at that retest level and not break those highs is confirmation that they're still in control. So now realistically we could take, and in this case it will be a pretty big trade. We could take the breakout of the lows here because this was the impulse move down, pull back, and then wait for a breakout, and then targeting our 2 to 1. And it would have been a successful trade. Straight to target here. Right? Straight to target. Setting the limit for a breakout. Once we saw that it was respected, just set a limit for a breakout. Straight to target. And that was just looking back. Of course, I would have to run it in replay so I can see if I could catch it as it's developing. But that wasn't the trade that I wanted to use in this example of the video. It was actually this one. Same thing. Putting in some highs here. Right? Highs are put in. We had to push above those highs. We were looking for a leg to get broken. In this case, it was this leg. Now, if this red candle was lower than the wickedest green candle, it would be perfect. right? But it wasn't. But I'm still knowing that this is the leg here that formed this impulse move up. So that's still what I'm looking for it to break here. So in this case, it would still be this level that we're looking to see a retest at. Right? So boom, impulse move through that level. We got the retest of that level. And if we would have hopped in here, we would have had to sit in drawdown. Who knows what that drawdown could have been? Bulls could have stepped in and stopped the side of the trade. So what's the best thing for us to do is wait for that confirmation showing that the bulls are not strong enough, that the bears are overcoming them, setting a limit at these lows, getting triggered in at those lows, taking a breakout, setting the trade for 2-1. And this was actually set 3-1, but if we're just gonna follow a system here, we can set it for 2-1. And it was only set to 3-1 because we identified there was a range at this point, and we were targeting the lows. We were targeting lows of the range, so that was the only reason why this trade was set to 3-1. But yeah, just simply following the system. Let's say 2-1, for example. If we want to test this out on 2-1 and see, and then back test it on 3-1 and see how it performs, it'll be a good trade, right? Straight to target, good momentum, and of course volatility was higher. We're seeing conditions of the market selling off. We had catalyst to help with the market sell off, but that's pretty much what I'm looking for. And then on the daily, it's the same thing. On the daily, the pivot point, the leg, the impulse move up that we were looking to break was this. And it would be the same exact thing. Okay, we had these highs. And we wanted to be new highs of the trend, the last high of the trend, right? So this isn't as accurate, but if we go to the daily, we can see that it was the same thing on the daily. That's why I was using this example, right? So these were the previous highs. These are the new highs on the daily. This is the leg right here that created those new highs. This is the leg that created them. Same thing. Sweeping above those highs, right? Sweeping above, not breaking through it, no follow through above it, no holding above it. Failed at it, so we swept it. That's liquidity. That's trapping in buyers in the market. Then we're getting that move down. We got the nice move down through this pivot area that created that leg up, or through this. I don't know why I'm not getting my terminology right, but through the leg up, through the leg that created the move up, we got to move through it. Now on the daily, if this candle would have been super strong bearish through it, that would have been even better because we're seeing displacement through those lows. So that would have been even better for us to see. And that was the reason why I didn't hop in down here, because this candle wasn't strong enough bearish momentum to give me that displacement through that level that I would like to see. But it's the same thing. Boom. We got that break. We got that retest showing us that sellers were still in control. We could set a limit for down here to take a breakout down here if that's what we're going to do. Even on the daily, entering under this candle. And then here we would have to manage our risk differently. Since this is the level that's protected, I would probably go down on a 4-hour, right? And put our stop loss above these highs that respected the retest, or above these highs that were above the area to retest, and then targeting a 2-1. Let's see if that would have hit. Yeah, 2-1 would have played. We would have been good on that 2-1 as well. Now this is a huge trade. Who would have been able to predict that market's going to sell off 600 points? You feel me? Especially selling low when the trend started up here. You had to give away 180 points from the ideal entry, but more confirmation. And then that wide of a stop loss is targeting a 2-1 is making this kind of a home run trade. But in this case, it would have played out if you stuck to it with the confirmation that we got, seeing that we were trending down. Again, maybe I'm less likely to take this trade, seeing that we were in a range. And for this trade to hit, you would have had to anticipate a break of the range, which is better to just wait for a break of the range than try to force a break of the range onto the market. But that's just to show that, okay, when we're in those trending conditions, when we get that confirmation of the rejection, when we get the confirmation of sweeping those highs and taking liquidity, then we can take a breakout. I was always so afraid of breakouts because back in 2021 and 2020 when we were taking breakouts, playing Roku options, all of that, I wasn't understanding where to place the risk at. I wasn't understanding how to analyze volume and spread analysis. I wasn't understanding what was the real move and what was the fake out. And that just, it was a lot of trauma trying to play breakouts, you feel me? I was like, I would rather buy in as low as possible, as cheap as I possibly can, as close to my stop loss as I possibly can, and let price come to me instead of taking a breakout. But now I'm shifting my mindset, seeing that as long as I have these confirmations that price is moving in the direction that I would like it to go, and there's giving me signs that I can get continuation in the direction that I'm looking to go, it's safer to take a breakout, right? You can take a breakout without having that perfect exact entry that you want, especially when you're trading it on the higher time frames, because you're getting that higher time frame follow through from those big players. So yes, when I'm day trading, I definitely want to have as tight as the stop as possible. Not saying you can't breakout trade on the lower time frame, but it's making even more sense to me now that I'm trying this with a higher time frame strategy, that I can just take a breakout under these conditions if these confirmation signals are being given to me, right? So I hope that makes sense. And then looking at this sim trade that I'm in, just to see, just to test out, just trying to forward test it before I put real capital behind it, because moves like these are requiring more of my capital. So I really want to make sure I'm going in, going from risking 10 points a day or whatever the case may be on a 5-minute chart to going to risk 70, 100 points. You feel me? You want to make sure that you're paying attention to what you're doing, and you know what you're doing, and you got something that you can put your trust in. Same thing here. Now with this, identifying that it's a counter trend trade. On the daily, we're seeing the same thing. On the daily, the difference here is there's no daily movement supporting this change in trend. So I'm not looking for a home run, right? Honestly, I'm questioning myself. We're gonna see how it plays out, but I'm questioning myself if this is a trade that I should have even taken. Clearly, it's a downtrend. We should be shorting pops. Is this a trade to even take? I'm seeing the setup that I'm seeing the setup that I'd like to see. Only context I'm not seeing is we're not necessarily at a major area of support. We're not necessarily at a major area of support. So looking at ES, this is the continuous contract because MES is not showing us all of the price action we like to see. We know there's a huge level here that we're looking to retest. Now, for whatever reason, we're already opening the next day above this level, which is great. Hopefully, we open above it and it runs and takes it to TP on the other contracts. But what we're looking for is basically a retest of this level that we're seeing here. And that's all we're looking for. Knowing that here, okay, we got the 200-day moving average here. We're below. We're looking for a retest of that 200-day moving average. Where we're looking for a retest of this area of resistance. That's our thesis for the trade. We're knowing that price can make a move there, and that's pretty much the only thing on the higher time frame that's giving us that thesis that we can get a move up. We're not getting necessarily any crazy double bottoms. We did get a push of those lows, and we'll sit on the 4-hour instead of the daily, but the daily is not shifting. So without the proper W bottom daily shift, of course we could have a V bottom. Of course we could run the all-time highs, but that's not the play that I run. I'm looking for some type of double bottom, some type of fake push to the downside to get more sellers into the market before we push up higher. So again, of course, we can see a V bottom recovery or a V bottom reversal, but that's not what I play. You feel me? So, but on the 4-hour, we are seeing what I play. On the 4-hour, we are seeing this low was put in. Let me turn these averages back off. On the 4-hour, we are seeing this low was put in. We swept down below it. Here's the leg that made that impulse move down. Now, of course, we could argue that this is what we want to get above here, and this was a small level that was tested, right? We bounced off of it here, broke through it, and then rejected off of it here. So that's why I didn't like my entry. I didn't like knowing that there was possibly a small area of resistance here that I was just buying right into, and we could easily just reject and roll over. With this being the top of a small range that could possibly form, right? This is a small range that could possibly form. I'm buying right here. There was nothing stopping the market from selling off, stopping me out, and going right back to the bottom of this range to continue the overall trend down. So those are the things I didn't like about the trade. But we are seeing the setup, and this could be detrimental. Sorry, I'm ranting, but this could be detrimental because just because we're seeing the setup, you got to consider overall trend, overall context. All of those things got to go into this, right? So just because you're seeing the setup doesn't mean it's a good setup. But anyway, we got the lows. We swept the lows. Confirmation 1 check. We failed to push lower. It's showing us that buyers are in control. Sellers are no longer in control because they failed to push lower. What is the next sign that buyers are in control right now? We broke above that area that created the move down, right? So buyers stepped in here. Buyers tried to step in here. Sellers came back in. They said, no, we're still in control. So I said, okay, let me allow the sellers to show me that they're in control. And they didn't pass the test. They failed to move price down lower. Buyers said, all right, we'll step in down here. The buyers came into the market, broke above that level that we're looking to take. Traditionally, the way I would play this is taking a blind retest of that level with my stop below the lows, targeting a 2-to-1. Right, targeting a 2-to-1. That's probably what we would have taken there. And that would have been the trade. You feel me? It would have been like that. But what we're seeing is what I was seeing a lot of the times was when I wasn't considering the context and the overall trend and I was just looking for the pattern, is taking that blind retest against the trend is doing nothing but setting you up to get stopped out, right? If there's anything I should be doing, is shorting when I see this setup and the overall trend is down. So now more than ever, I should wait for that retest to just play out and give me another layer of confirmation. So instead of taking that blind retest, see the high that was put in, show me our third layer of confirmation. Sellers came in, buyers held that level, buyers showed that they were still willing to hold that level, and we got strong buying through the high, right? I wasn't at the computer at this time, so I could have had my limit order right here. Could have had my limit order right here at the highs of the previous candle, waiting to get in, right, with my stop loss below the lows, and setting the trade for 2-to-1. Or even my stop loss here where it's at, because this is where it was based off the 4-hour there, and I know I want to see those lows protected, right? Once we get above here, I know I want to see those lows protected. So it was based, my stop is here, and I'm looking for a 2-to-1 at least, knowing that we're looking for this area of resistance to be retested. This was supposed to be a trade, but I wasn't at the desk, so I chased, and I ain't gonna lie. You feel me? I should tighten up and trade this exactly how I would trade it. But I really just wanted to get the sim trade in, have some type of emotion tied to it. Because believe it or not, I am kind of emotionally invested in seeing how this plays out. Because I'm forward testing it. So although I didn't execute it exactly how I would, and I don't want to reinforce any bad habits of not having the execution that I want to have, I do want to allow something to track, right? I don't want to just, not just paper trade it in my head, I want to see how it will play out. I want to have an actual result at the end, something that I can measure. But anyway, that's just the same thing. So I think waiting for that retest to confirm instead of taking it blindly, I think waiting for that retest to confirm. Yes, you give up 70 points. Yes, you give up 70 points when you wait for that retest, but I think it can increase the win rate simply based on having another layer of confirmation. You feel me? I think this alone, yes, these are great. Yes, this is a huge piece of the thesis. This is a huge piece of the puzzle, having those sellers trapped at the bottom, knowing that liquidity has been taken, knowing that the move to the downside has been put in or should be put in, and now we're looking to go to the next area of liquidity higher, whether we're filling a gap, whether we're retesting a level, whether we're going to run highs. That's a huge piece to the puzzle. But as far as our entry goes and having confidence that we can get into the trade and have it move into the direction that we want it to go, I think waiting for that retest is even more important, because too many times have we seen a good setup, we got in, and then this just goes, again, there was nothing stopping us from rolling over and going right back down to the bottom of the range. And they're still not. We're still not in the clear, right? Tomorrow we could still fail to hold above this level and roll back over to the bottom of the range. But I would at least feel much more comfortable knowing, with these signs here, with these signs seeing that sellers tried again. There's no reason sellers should be failing in an overall down market, right? So that either means that we're looking to move higher in the short term to test the level, or we're looking to see short term bulls step in. But there's no reason why they should be failing, and this is their market, right? So that's such a layer of confirmation that we like to see, and then a nice impulse move up, beautiful. So I think taking a breakout in this context could really be a game changer for the way that we're executing this type of setup. So that I think that alone turns it into an A+ setup. Yes, this is an A+ pattern. The pattern plays out. It plays out often. You'll see it happening whenever we're changing directions. You'll see it happen on all the different time frames. Whatever it is, because even if we're gonna sell off, what are we gonna see once we get back? Let's say we do sell off here. What are we gonna see on the lower time frame? We're gonna see a high that was put in. We're gonna see a higher high that was put in. We're gonna see structure that was broken to the downside, and that's gonna be initiating our move back to bearish price action. So it plays out often. It's just coming down to the context, where you're seeing it happen on the charts, and how you get into it, pretty much. Because you could, taking that, being afraid to miss the move, or wanting to get in nice and cheap, is not. I don't want to say it's not worth it, because again, in this scenario, it's a 70-point difference. It is a 70-point difference than the entry that we got, but I think it's worth missing out on, because you get that layer of confirmation, and since it's the beginning of a trend, you have so much potential to still capitalize. Right? This is the very beginning of a possible trend that's developing. So even though you give up 70 points, like here, literally the same thing. We could have got in up here. We could have got in up here and saved ourselves almost 30 points. But we gave up 30 points. And what was giving up 30 points to a trend where we dumped 600 points to the downside? What is that 30 points really in the grand scheme of things? In the grand scheme of things, that 30 points, it cost us 30 points to allow ourselves to hop onto the back of a trend that was 600 points to the downside. Right? So it's a little sacrifice for a little bit more confidence and influence. And then even with that, I'm trading that for the confidence of having that extra confirmation. I could have just went ahead and sized up, right? Knowing that, okay, this could be the beginning of a big trend. I could go ahead and size up on this now. Yes, I had to sacrifice 30 points, but now I got an extra layer of confirmation that's giving me enough confidence to go ahead and size up on this trade. And now it could possibly be an even bigger trade than what it would have been, or an even bigger trade than that 30 points that I sacrificed for that extra confirmation for me to know to size up on it. And it was a good setup. So, this is what I'm looking for. This is what I'm testing out. This is a small, very, very, very small tweak in the system. Honestly, it's a very small tweak. Now, swing trading it is a large tweak. Again, I was looking for these setups on lower time frames, and I could probably even take this into lower time frames. And even if I don't continue to be a swing trader, or I continue to take higher time frame trades, I can analyze and wait for these things on a higher time frame how I'm supposed to. I can be more strict about it. I know that if I see it playing out in a larger time frame, I'll know what I need to look for playing out to give me even more confidence in the lower time frame. I might go back to just day trading. I might go back to trading the 5 minute. It might be that. I might look for 5 minute entries for better entries and better risk to reward, and lower, having a risk smaller capital. I might end up doing that, but at least putting in the work here for a little bit on the higher time frames and seeing it play out on the higher time frames and getting some of that higher time frame participants commitment behind these moves is going to help a lot. So that's what I'm looking for. Now I'm going to just ramble for a little bit about the small tweaks to the system. So when I was trading supply and demand, it took me a long time to realize I wanted to see structure break. It took me a long time to realize blindly selling supply zones was ending up in price continuing to push higher, not caring that I entered that supply and running the zone and stopping me out. That made me realize that I wanted to see some type of price action within the zone, some type of change of character, some type of break of structure, some type of shift in trend at the zone before I got involved. So it went from saying this is an absolute zone where price is going to reject from to me shifting my mindset and saying this is now going to be an area of interest where I want to look to possibly put on the trade. Right? So it went from the supply zone being, oh, this is where I execute trades, or this is when I sell and press to get involved, to this is an area where I'll look to get involved. I'm going to set an alert. I'm going to evaluate what's going on. I'm going to use my context clues. What is the market telling me? I'm going to look at what is the trend of the market. I'm going to look at what is the volume telling me. Is there any indication that we can reverse here? And then that's what I'm going to do. And then I kind of, looked even more. Okay, now it's getting doji candles in the zone, but we get a doji candle, price reverses, and then price never takes out the low, and then it just creates a W bottom and then goes up higher through the supply zone, and I get stopped out. So then I said, okay, now I'm going to do is essentially what I'm doing now. Like, let's say this is a supply zone. Let's say there was a supply zone up here somewhere. Right? Let's say this was supply. Instead of blindly just selling when we entered up here, now I'm waiting for something like a sweep of the highs, a break of the lows before I enter. Then now I'll enter with my stop loss above the zone. And then a movement out of the zone. Now that's giving me confirmation that we can get fuel for a downside move. Seeing that buyers are trapped now in supply. People are buying in supply. I was doing that before. So now that I see that they're trapped, now that's more of confirmation for me to go ahead and hop in. Instead of just blindly, price touch the supply zone, let me hop in. So I had to put those pieces together, make some small adjustments, put those pieces together. And I still think I was missing, context, understanding what conditions it works best in. So that's still something I can go and refine in the future. But then I switched to just seeing, once I was seeing that entry signal play out so much, even at supply, at those zones, now I'm seeing it happen at just regular support and resistance. Like, oh, you might come down at support and see a double bottom and a push up. Now it was the same thing here. Here I didn't really like it because it wasn't, what happened, but something was telling me, the context was telling me that I shouldn't take this trade long. So yeah, we kind of got a lower low, a break at a high that made that lower move. And then I was looking to blindly take the retest, but I didn't. Right? So again, here it would have been cool if price came down, retested the level, showed that it was holding, and then I could just go ahead and enter above the highs, putting the stop at the lows because we got that confirmation that price was holding. But price didn't hold, so I didn't take that blind retest of it because I was like, all right, we're in a downtrend. We got this 4-hour shift showing us that we're in a downtrend. We got the daily shift to break below the pivot and retesting into that pivot showing that we're in a downtrend. I shouldn't be trying to long right now. So that was the reason why I didn't take that trade. And it was the same thing. Before, I wasn't using that context. I wasn't saying, look, we got the retest confirming that sellers are strong. Let me not buy. I was just seeing the pattern and taking it. So that's why I'm feeling good. That's why I'm optimistic. Please, Lord, praying to the bulls, praying to the bears, praying to the kangaroos. Please don't please don't take my excitement and humble me that I know you can do. Right? I know you can do it. But I am feeling good that I was able to identify those small tweaks to make to my system, because everything is literally bare bones. This is something that I can go ahead and describe in just a few sentences. What are we looking for? Areas of interest, whether major supply and demand levels or major support and resistance. That's all we're looking for. Some type of a sign that liquidity has been taken and that trend possibly wants to shift. We're looking for price action to retest a level that confirms that the opposing side is trying to attempt to change the direction of price, and then we're going to get involved on a breakout of the last highs that were put in after the opposing side or before the opposing side showed confirmation that they were attempting to take the trend. That's it. Set a 2-to-1 target. Beginning, starting. We're gonna set a 2-to-1 target, and that's the whole system described in a couple sentences. You feel me? And then plus the nuance. We're risking X amount of our account. During these hours, we're looking to trade. But that's as far as executing our system. That's what it is. That's literally what it is. And then a couple other context clues. What happened before it? Are we respecting it? Are we respecting a previous trend shift? Are we still respecting that? Is there any signs that that's over? Is there any signs that that's overextended? Ooh. So yeah. Again, I'm impressed that I was able to take this and tweak it so quickly. I don't know what told me to take the breakout. Because I'm like, people are taking breakouts and finding success. It was just something that didn't work for me. The only thing that I came here and said I was going to do differently is I'm no longer going to continue to do the things that aren't working for me. So something has to change. I know I'm close because it plays out. It works. It just doesn't work enough. Right? It literally just doesn't work enough. I just needed to add either one more filter or one more layer of confirmation or something. I know it's a good setup. I see it play out so often. I see it lead to crazy impressive moves. I just need an extra layer of safety. I just need to make sure that I'm not stepping in front of the opposing side. I need to, when we're seeing this retest here, when we're seeing these bears pulling to the level, I need to know that I'm not blindly just trying to step in front of them and hope they don't drag me down the hell with them. That's the only thing I was needing to do. So if that means I gotta wait and take the retest of the level, then fine. Another thing that's gonna help me with is not missing the moves. Sometimes that retest happens so fast. That I'm not able to get involved. Sometimes the momentum is so strong that I'm not able to get involved, or the volatility is so strong that we never get a retest. Right? We may never get a retest. That was the thing back here. I was going based off of this level. So I didn't like this. Again, like I said, this red candle, if it would have been shifted down, I would have went based off of this one. But it wasn't, so I said I'm just gonna wait for the low to get broken and retested. The momentum was so strong, the low never got broken and retested. Right? So if I would have gone based off of this level, we could see, okay, break through that. This is the leg that created that high. It retested, it held. Now let me just enter on the break of this low and see. Since we got confirmation that price probably doesn't want to go back up to here anytime soon, we can set the stop loss and respect it. Let's expose ourselves to the reward of this trade with the breakout, instead of waiting for price to return back to here like it never did. And then that also leaves psychological flaws, because now I'm sitting here watching this move dump 600 points, and I'm like, yo, I know we can get a retest though. I know price will come back and retest it and continue to trend. And now by the time price gets back up here, after we've seen a daily double bottom and now it's bullish again and we're going to run all-time highs, I'm still looking to short at this level. It prevents that too, because you're in the trade. You caught the trade. Okay, boom. The move played out. Now let's wait and look for us to try to identify the next shift. in the market or the next opportunity to get involved. Because even this play, we're identifying that this is a counter trend trade. I haven't seen what I want to see on the daily yet. So by the time we get to this level to retest, I'm going to be looking to see the first thing I'm going to be looking to see. Of course, we can break above this level. Of course, we can break above this area here, this leg, and turn bullish and continue to go higher. Of course, that can happen. But the first thing I'm going to be looking for is trend continuation to the downside when we get back into these levels. The first thing I'm going to be looking for is some type of, whether it's the 4 hour or the 1 hour double top, right? Run of the high, break through the lows, retest, and getting back in for short, taking a breakout of the lows for short. The same thing we just did, but reversed at this level. And we are more likely to take it even if it happens on the 1 hour as opposed to the 4 hour, because the overall market is showing us that we're trending down. Even if we retest this level, we're still going to be under the 200 moving average, the 200-day moving average. We're still in a bearish environment. I'd be looking for continuation to the downside. So it would just be it could set up to be a great trade opportunity. Even then we'd be targeting those lows, 266 points from that. Again, we might end up taking a breakout where we're somewhere down here. Still a 200-point move to target those lows if the trend's going to continue. If not, we get out here. We get out where we know we can see resistance in the market. We get out here where we know this is an area of interest where anything can happen. We can see a lot of manipulation around that level. We can see sellers stepping at that level. We know it's just an area of interest. So once we get there, we don't want to be in something, waiting for something to happen, anticipating a break or hoping that we get. We're just going to wait, get out the trade there, and analyze the market and see what we're going to do next. That's the beauty of ending up in an area of interest after a trade, is now we can analyze, you feel me, with no sweat, no capital is on the line at that point. You can analyze what's happening at that level, and more than likely you're going to be offered a trading opportunity somewhere around that level. So that's the thing. It's better than having to just wait days or weeks or whatever for price to return to an area of interest. Because at least this time we're getting some type of thesis that we might be able to ride the move and profit back up into that area of interest. Again, the overall trend is down. You feel me? Barely breaking above highs. This could be a losing trade. Cool, that's fine. Those are going to happen. And what am I going to do? I'm going to say, okay, maybe I should, maybe it is better to just let that pass. Let these type of trades pass, despite how good it looks, despite the levels of confirmation that we have, and just wait for exactly what we want to see. I'm not naive in the sense that this is not checking every single box. It's checking a good majority of boxes, but it's not checking every single box. But this is the first time, I was a little excited. I was a little eager. This is the first time that I could go ahead and say, all right, I'm gonna try to break out. I'm gonna go ahead and try to break out. You feel me? And we're seeing more levels of confirmation, right? Even going down, where's the breakout level back above the highs? Price came down into it and then reclaimed it again. It would have been much, much better if we just held above it on the 5 minute. And I was trying not to look at the lower time frame because there's no need for me to do it. But I was getting a little nervous. I was like, okay, we got a 30-minute demand zone here, or a 15-minute zone. If price breaks back below this area, I'm kind of cooked. Because what happened? The high, the low, put in a new high. If price impulse moved down here, broke below, retested that would be a great short opportunity to continue to trend to the downside. Even if it happens on the lower time frame. Why? Because the overall is bearish. So even if we just get the shift on the lower time frame, it would have been safe for us to take it short. So knowing that that area was there, knowing where our stop loss has to be, but knowing that that could be the beginning of price ultimately going against us and stopping out was important. We saw this channel that was developing where price was just trending down. Basically ended up trending into that 15-minute zone. The same thing that I would struggle with. Yes, this is a 15-minute demand zone, but again, before I was blindly tapping the zone. Price is trending down at this time. Who's to say that it won't just trend down straight through this area and hit the stop loss that's supposed to be placed below this zone, right? Nothing would have been stopping it from doing that. And then on a 5-minute, nothing would be telling me, there was no structure to show me that I could get into this trade besides waiting for price to finally, one, break up the channel and break above this area here, or break above whatever swing point put in a high. So I was kind of sweating when I was seeing that. Eventually we broke out. I stopped watching the charts. Eventually we broke out of that. So that was some confirmation. Seeing us reclaim that level, reclaim the level that we wanted to enter at, those highs that we wanted to enter above, was very important. Seeing that we're breaking above it, reclaiming it, holding it, is very important to say, okay, buyers are continuing to do what they're going to do. And then this minor level of support and resistance here is the next thing we want to look out for. Seeing that we broke above that was cool. Seeing that we tried to hold it is cool. Again, we got a whole nother day, a whole overnight session, where we want to see a hold, so we're not out of it. We're not safe, but kind of seeing that price is confirming that move higher for now is good, right? So that's what I'm gonna be doing. That's what I'm gonna be testing out. I'm gonna be testing out on the higher time frames. I'm gonna try to get used to swinging. It takes a lot of mental capital to not even open the charts. That's why I just decided to let me open the chart and make a video now, because swinging is a lot. When I was swinging positions, I couldn't sleep, and it was mainly because the stop loss was so tight. Overnight, I could easily, my 10-point stop could easily be ran overnight. I was using it, executing those in the 5-minute entries and trying to swing them based off a 5-minute structure. Now that I'm thinking about it, now that I'm saying it out loud, that doesn't even make sense for real, but that's what I was trying to do. I had to manage my risk. I had to stick to, a $50 loss, $100 loss. I couldn't set a 70-point stop loss with my account size. I couldn't do it. Now, what I'm going to do is, look, I'm throwing those small account restrictions out the window. If I have setups and they require a 70-point stop loss and it works, I'm going to take it. I have the capital set aside. I've had the capital set aside to add to an account once I was consistently profitable and once I found an edge, so that I could take those bigger trades and still be within proper risk. So why am I forward testing live with these limitations when I can just go ahead, sim trade it, figure out something that works, and work without limitation and free myself from those limitations? You feel me? So, one of the biggest problems that traders face is being undercapitalized, not having enough capital, not having the level of risk that they need. Because to stay within proper risk and to keep those emotions down, you got to be making sure you're risking a small amount of your account per trade. So all of it is coming together. That's why I'm so excited about trying these different things out, because I feel like it'll solve a lot of things, a lot of the problems that I was going through. I feel like they're being solved here, right? By trying these new things out and freeing myself from the previous limitations of my trading, freeing myself from continuously doing the same thing over and over again because of, like I said, because of those limitations. So we'll see, man. We'll see. We will see. But this is what I'm doing. The stress of swinging overnight, like I just said, maybe it was because I had 10 point stop losses. but I can't. It's very hard to stay off the charts when you have an open position. It's 7:39 right now. The market been closed, and I'm still in the charts right now. It's very, very, very hard to stay off the charts when you have an open position, especially because I'm so used to just watching, waiting to see, waiting for that gratification, waiting for that dopamine. Am I going to have a winner? Am I going to have a loser? That was another thing that was kind of messing me up with the lower time frame, is taking those losses so quickly. I don't know if I want to take losses quickly or take losses, have my hopes up for days and weeks at a time and still lose. I don't know what hurts worse, but seeing those losses happen so quickly, so frequently, back to back, is really detrimental to your mental capital, to your confidence, to your decision making as a trader. I don't know. If I get stopped out of this, then that's one thing. I don't know if I'm saying like at least I saw some green here and got stopped out. I don't know. I don't know which is worse. Seeing those losses happen quick or what. But staying off of the charts is very difficult to do. Sleeping with positions open, having a good night's sleep. I was waking up, just straight waking up. My subconscious knew I was in a trade. My subconscious was terrified. I'm waking up at 4 a.m. like, okay, I know Asian session started. I know we might be getting some movement. I have to check on the trade. So coming from being out by the end of the day to saying, okay, now I'm going to hold trades for days. Like, I'm just going in. I'm not even trying to transition slowly. I'm just saying, look, if I catch the beginning of a trend that can possibly play out for days or weeks, I'm going to just get in it. Set my 2-to-1, set the 3-to-1, and just get in the trade. Right? I'm there was no plan for me to transition from day trading to swing trading. I'm just cutting the day trading cold turkey pretty much. So it's gonna be difficult. It's gonna take some adjusting mentally. Once you execute, there's nothing to do. It's not like it's gonna go to, I got a 200, 300 point target, 100 point target. It's not gonna go to target immediately. So there's nothing, like, what am I supposed to do? There's no point in me sitting and watching the chart when you put on a position like that. There's literally no point in you doing that. You gotta go outside, goddamn. You gotta live life. You gotta get off the charts. You gotta do something. And then the fact that it could be open and it can run for days or weeks at a time where I'm continuously not doing anything, that's crazy too. Because now I could go days or I could go weeks without having to open the chart. So all of that's going to take some getting used to. Hopefully I can take what I've learned from the higher time frame, if need be, and apply it back to the short term trading if that's a plan in the future. I think it would be easier to go back and do that. But here's the thing with that is I already need, this is only a strategy that works in trending markets. It's already a strategy that's catching tops and bottoms. And in some cases, just continue. In some cases, it is just continuation. Like, again, if we broke below this 15-minute demand, higher, break of the pivot, retest, break out of the, break lower, then that's continuation. Cool. We can target external liquidity. That's internal to external. Cool. But a lot of the times, it's the beginning of a move happening. We identified the beginning of a 600-point sell-off here that we wanted to get involved in. So at this point, what is the point of day trading it? What's the point of watching this play out on the higher time frame just to go down to the lower time frame for risk's sake of only trying to risk $50 and only going to catch 20 points? What is the point of waiting all of this time for this beautiful setup to present itself to say I'm just going to get in and get out and get in and get out? It's not like I'm risking a crazy amount of capital on the daily to have to say, okay, I can't expose myself to overnight risk. I'm going to take my $100 and make sure it's safe. I don't give a damn about that about that $100. You feel me? It's much more beneficial for me to be able to identify this and then ride the trend, because the only thing that's gonna happen is I'm exposing myself to more risk due to the lower time frame fluctuations. I've already identified the trend. I know that my analysis is correct. My it's not going to do nothing but throw my execution off, stop me out early or something, trying to continuously get in and out of this trend when I can just hop in, be cool, wait, what's the sign of it ended, boom, take profit. There's no point in me getting in and getting out every day, assuming more risk by taking out, whether it's a bad execution, improper stop on a lower time frame. You feel me? What's the point of doing that when you can just hop in and let it rock? So I feel like it just works best for the methodology of the strategy too. Is it should probably be applied on a higher time frame, because you get those trending moves on the higher time frame, and then you get those fake outs and those fake shifts on the lower time frame. So might as well just apply it to the higher time frame. That's what's going to give you the smartest thing to do anyway, because the market's not going to do nothing but, if you do day trade it when the market's trending, it's not going to do nothing but give you a good trending week or a good trending couple weeks or whatever it is. Most of the time it lasts for 2 weeks, a good trend for 2 weeks, and then the market going to go sideways and you're going to still be trying to day trade. You're going to fuck yourself over and you're going to give back your profits and you're going to be in drawdown. You might as well just, if you know you got to wait for a trend on a higher time frame anyway, you might as well wait for a signal on a higher time frame and ride the trend out on a higher time frame. You feel me? So that's what we're going to do.